Welcome back to Investing Talk Podcast. Today we're looking closely at a company that's really interesting, right at the crossroads of energy security and, well, massive market demand. That company is Uranium Energy Corp. And the big question we're tackling today, using all the latest info we could get our hands on, is pretty straightforward. Is Uranium Energy Corp a good buy right now? Before we jump in, if you find this analysis helpful, please do subscribe, like the show, and maybe leave a comment. We really want to hear what you're thinking. And hey, if there's a specific company you want us to analyze next time, definitely let us know in the comments below.
That really is the core question, isn't it? And to get you a solid answer, we've pulled together quite a bit of information. This isn't just about, skimming a press release. We've looked at recent operational updates, the underlying financials, technical chart signals, and crucially, what's coming up next are the catalysts. You really need that kind of full picture, that 360-degree view to get a balanced perspective.
Okay, sounds good. Let's start by setting the scene then. What's the general environment been like, say, over the last 3 months? Because sentiment towards nuclear has shifted, hasn't it?
Oh, massively. It's been a huge turnaround. What the sources are telling us is that there's been this sweeping change, not just public opinion, but political attitudes, too. Back in September 2025, we saw attitudes towards nuclear energy hit all-time highs. And this isn't just a blip. It feels like a structural shift, which, really boosts the long-term demand forecast for uranium, especially from reliable Western sources. It creates a strong underlying tailwind for the whole sector.
Right, a rising tide. And Uranium Energy Corp obviously saw this coming. They moved quickly with a big capital raise in October 2025. That felt like a real signal of confidence from the market.
It was very decisive, yes. They pulled off a really successful equity offering, brought in about $203.8 million. And that figure includes the full over-allotment option being exercised, which just shows how strong the demand was from investors. This cash infusion was critical. It wasn't just topping up the bank account. It seriously strengthened their balance sheet, gave them more liquidity, specifically earmarked for developing projects faster and scaling up.
Okay, but here's where it gets a bit confusing, maybe. Despite that successful raise and all the positive sentiment you just mentioned, the stock actually dropped. It took quite a hit, maybe 10%, right after that news in October, along with the rest of the uranium sector. So for anyone listening, why would good news like that lead to such a sharp drop? What's going on there?
Yeah, that volatility, it tells you exactly what the market's worrying about. It boils down to geopolitical risk, essentially policy risk. The dip seemed to be driven by a couple of things. One, just natural profit-taking across the sector after a really strong run-up. That happens. But more importantly, there was a lot of chatter, speculation really, about potential changes to sanctions on Russian uranium.
Ah, okay. And why would rumors about Russian sanctions make Western producers like Uranium Energy Corp fall so sharply?
Well, right now, the market's trading on a kind of scarcity premium. Western governments are pushing hard to, bring supply chains home, reduce dependency on Russia and other state-controlled producers. So the minute you hear whispers about things maybe stabilizing or rule changing that could let more Russian supply back into the global market, well, that perceived premium for North American producers like Uranium Energy Corp gets undercut immediately. The fear is that more stable Russian supply means more global availability overall, which could hit uranium spot prices.
That makes a lot of sense. Policy giveth and policy taketh away, it seems. But policy is also the opportunity here, right? If we rewind a bit to August, we saw more institutions getting interested, specifically because of new laws in the U.S. and Canada focused on supply chain resilience. How does the company fit into that?
It's really about their footprint, their strategic geography, and having assets spread out. Their operations cover Wyoming, Texas, and Saskatchewan in Canada. That diversification means they aren't overly exposed if there's a disruption in just one region. Lawmakers and the big institutional investors, they see this as a major plus. Uranium Energy Corp is viewed as part of the North American solution to this supply chain problem, which is exactly what those resilience mandates are aiming for.
And then in September, technically speaking, the stock price actually pushed above the average analyst target price. What does that signal?
Yeah, that technical move, it suggested the momentum wasn't just short-term noise. When a stock breaks above those average analyst targets, it often signals that the bigger players, the institutional money, are catching on, maybe faster than the analysts can update their models. It showed strong underlying investor belief heading into the last part of the year.
Okay, so the backdrop is generally positive, but definitely sensitive to geopolitical news. Let's shift to the fundamentals now, because this seems to be where Uranium Energy Corp really stands out. Talk about that revenue jump. It's pretty staggering.
Oh, the revenue figures are, well, they really tell the story of scaling up successfully. If you look at the trailing 12 months ending in 2025, they reported revenue of $66.84 million. Now, to put that into perspective, compare it to the year before, 2024, when it was only $224,000.
Wow.
Yeah, that's a 29,738% increase year over year. Just think about that level of growth. It's the clearest sign they've moved from planning things to actually running a fast expanding business.
But there's always a but, isn't there? While revenue exploded, so did the losses. They widened quite a bit to negative $87.66 million, which is like a 200% increase in the loss. For someone maybe newer to commodities or mining, that seems backwards. How do you explain losing more money when you're making so much more revenue?
It's actually a classic story in this phase, especially in mining or resource extraction. It's the emerging production phase. That bigger loss reflects really heavy spending, big upfront investments, the costs of scaling up operations, getting multiple sites running at the same time. It costs money to make money, basically. Management's focus now is on hitting that point of operational leverage. The idea is once production smooths out and those big fixed costs are behind them, they can move towards profitability much faster. It's kind of a necessary growing pain to get to long-term efficiency.
And what makes them particularly resilient financially compared to others facing similar scale-up costs?
This is really key to their strength, their financial fortress, as some might call it. Two main things. First, and this is huge, zero debt. They carry absolutely no debt. Zero. In a sector that needs massive amounts of capital and deals with volatile prices, having no debt gives them incredible security and flexibility. They don't have creditors breathing down their neck.
Okay, that's a big one. And the second point you hinted at earlier was the unhedged uranium stockpile. How does that compare to others in the industry?
Right. So Uranium Energy Corp is sitting on a massive stockpile of physical uranium, valued around $425 million, and crucially, it's unhedged. This is important because many older legacy producers locked themselves into long-term sales contracts years ago when uranium prices were much lower. Because UEC's inventory is unhedged, they can sell it at today's much higher spot market prices. They capture 100% of that upside. It gives them amazing financial flexibility and a serious competitive edge that those locked-in peers just don't have.
So that inventory, plus their focus on U.S. operations, gives them a strong position, especially with policy now lining up behind domestic production.
Absolutely. They are a dominant player among the U.S.-based producers using ISR, which is in situ recovery. ISR is generally seen as lower cost and having less environmental impact, which is important these days. And having those assets primarily in the U.S. creates a kind of moat around them because national energy security policies are specifically calling for more domestic supply.
And we've seen concrete policy moves supporting this, haven't we?
Yes, definitely. Recent U.S. executive orders aiming to significantly and specifically strengthen the domestic nuclear fuel supply chain, these directly benefit a company like Uranium Energy Corp. These policies essentially label nuclear power as critical national infrastructure. That means the government is actively creating new guaranteed demand, whether it's through building a federal uranium reserve, giving preferred status to domestic suppliers, or even direct government purchases. They are set up to be a domestic winner in this energy policy shift.
Okay, solid fundamentals, supportive policy backdrop, but what's the market actually thinking right now? Let's look at the technical picture. Do the charts agree with this bullish story?
They really do, yeah. The stock's in a very clear uptrend. If you look at the charts, it's consistently trading above its key moving averages. It's above the 50-day moving average, which is around $12.28 currently, and well above the longer-term 200-day moving average, down near $7.79. When you see a stock holding above both those major trend lines like that, it's generally a strong bullish signal according to most standard technical approaches. It suggests the trend is likely to continue.
And if someone's watching this from a shorter-term trading perspective, what are the key price levels to keep an eye on for support and resistance?
Okay, the main area where buyers have stepped in repeatedly on pullbacks to support zone seems to be between $14 and $14.50. That's a pretty critical floor, both technically and psychologically. On the upside, the resistance, the level they need to break through to really move higher, looks to be around $17.75 to $18. What's also interesting for the near term is the RSI, the Relative Strength Index. It's currently around 55, which is pretty neutral. It suggests the stock isn't really overbought right now, meaning there's potentially room for it to run higher without needing an immediate cool down.
All right, let's look ahead then. What concrete events or catalysts are coming up in the next, say, 3 months that investors should have marked down?
There's actually a tight cluster of potentially significant dates coming up. First, November 6th, 2025, that's the Q3 earnings release. This will be really important because it should give us the first proper look at how management is actually using that big chunk of cash they raised. Then later in November the 29th, that's a key window for ETF rebalancing. This might sound technical, but it matters. Sector-focused ETFs have to buy or sell stocks to match their index, which can force large amounts of money to flow into leading companies like this, regardless of the day's news. And then, looking into the new year, January 10th, 2026, is roughly when we expect the institutional buy window to open up. That's typically when big funds start allocating new money for the year, and you often see flows into favored sectors.
Okay, those are the known dates. But markets also run on rumors and speculation. What sort of whispers are out there that could act as unexpected triggers?
Well, that huge capital raise, combined with the zero debt situation, has definitely kicked off speculation about M&A mergers and acquisitions. Given their financial strength, the market sees them as a potential buyer, maybe looking to snap up smaller companies with good resources. There's also persistent talk about the U.S. government actually starting its stockpiling program, the Federal Uranium Reserve legislation. If Congress pushes that through, it would create huge guaranteed demand specifically for U.S. producers. That would likely cause an immediate re-rating of stocks like Uranium Energy Corp. It kind of explains why, all 5 analysts covering the stock have a strong buy rating on it. The median price target is around $15.80, with some estimates going as high as $19.75.
Before we wrap this up with a final verdict, we absolutely have to talk about the risks. It's a commodity, it's mining, it's complex. What are the main potential downsides listeners need to be aware of?
Yeah, absolutely critical to stay grounded. The main risks fall into a few buckets. First, just operational execution. Ramping up multiple sites is hard work. There's always a real risk of delays or costs running higher than planned. Second, commodity price swings. Uranium prices can be volatile. Now, their large inventory helps buffer this quite a bit, but it's still an inherent risk in the sector. And third, profitability. While we understand why the losses widened, the fact remains they aren't consistently profitable yet. Making that transition to sustained profit is still a key financial hurdle they need to clear.
Okay, so bringing everything together, the zero debt, the strong U.S. position, that big unhedged inventory, the policy tailwinds, the positive technicals, and the upcoming catalysts balanced against those risks. What's the overall take? What's the investment thesis here?
Looking at the whole picture, the structure, their position in the market, the timing, the overall thesis looks, well, pretty bullish. I'd rate it something like an 8.5 out of 10. They seem structurally set up to benefit hugely from this global energy shift. They've got that explosive revenue growth. They're a clear leader in the vital U.S. market. The technicals look solid. And you've got that pipeline of catalysts coming up through Q4 and into early 2026.
So it sounds like it could appeal to different types of investors then.
Exactly. I think it's potentially attractive for shorter-term traders, given that cluster of Q4 and early Q1 catalysts likely generating news and volatility. But maybe more importantly, it also looks attractive for the long term. Patient investor who believes in the underlying story of growing uranium demand, appreciates their unique competitive strengths, and values that financial resilience coming from the zero-debt, high-inventory balance sheet.
That really clarifies the picture. Thanks for walking us through all the different facets of Uranium Energy Corp. It's a complex situation, but definitely a compelling one.
My pleasure. And just as a final thought for you to mull over, something to consider as you digest all this, given Uranium Energy Corp's zero-debt balance sheet and how much its near-term prospects seem tied to U.S. policy support for domestic uranium demand, how much of its long-term value is now less about traditional operational efficiency, the usual mining metrics, and more about the durability of that political commitment to rebuilding the entire U.S. nuclear fuel cycle? That political factor feels like a fundamental driver now, maybe more than ever. It's a crucial question for any investor in the space to think about.